let's be real. You are not losing trades because you're not smart. That's not the case. You are very smart. You are not losing trades because of that. You are losing trades. I lose trades when we guess. When we guess. And so either we are buying too late, buying too early, we're getting faked out in the chop, we're getting trapped. Right? It looks so good. We see a price breakout, and we getting in only for it to trap us, snatch our money or snatch the stop or put us in drawdown for then it to go back the way price wanted to go. There's so many different roller coasters and twists and turns. But what we do see though is price goes where it wants to go. And there's three moves, up, down, or it's chopping it sideways. And so if we can continue to just learn, we're going to make mistakes. No strategy, no person, nothing is 100%. And somebody might say they are, but anyway, it's not 100%. Only God is 100%, 100,000%, okay? Thousands of percent or whatever. And so we have to be mindful to just continue to, yes, we get frustrated. Yes, we want to learn this now. Yes, we want to get it, but take time to practice. So that's what we're about to do right now. So I am Denisha on a mission. My daughter just took a nap. We have about 10 more minutes left in the market. So we're going to study how price moves. I want you to do this every day, or whenever you can do it. But just take 10 minutes or so, 15 minutes. A good 15 minutes is good because you can watch a 15-minute section. But watch and see what occurred during that time frame. Try different times. And so I'll be coming over on here, sharing different things. So we're going to go ahead and get started. So, all right. We're going to be looking at the non-EMA. I have another video that's going over VWAP, and so we're going to be going over the non-EMA right now. So we're on Apple. It is 3:51 p.m. Apple currently is priced at 210.62. It's up 46 cents. And right now, as you can see, we are what? We are in the chop, right? So this has been, oh, this is a day chart. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in the chop. And as much as I wanted to get in this, because Apple has been on a decline, right? And then April 8th, we started to see some changes, or April 9th. And then it came back down, pulled back, rallied back up, pulled down, rallied back up. And it's like every time it hits this level, this has been a level of resistance. But at some point right here, it was a level of support. And so I have my alert set, and I'm actually probably going to put another alert right here. So I am in Thinkorswim, and I just right clicked when I went down to create alert and then create another alert up here that's going to let me know. And then that can give me an indication to get in. Now, some people will get in early, but we want to avoid the chop, right? And we also want to know this could actually pull back. There could be some news that pushes this down. And so we have to look and see also when tech earnings are coming up or when Apple earnings is coming up too. But anyway, and actually here it is right here. We have somewhere in between end of July, early August. It's gonna be that. Oh, here it is. Oh, actually, okay, so we have July 31st is gonna be Apple's earnings at 4 p.m. So we just want to be mindful, and that could be what it's doing too. It's stalling right now. It's in consolidation. And so when we're in consolidation, imagine a ping pong tournament, right? You got these amazing people on both ends. They got their paddles, their ball, they're going back and forth, hitting the ball. One person hits the ball, one person. What do you think we are when if we were in a ping pong tournament, what do you think we would be? What do you think? I'm hoping you said the ball. We would be the ball. Don't let nobody else tell you that. We would be the ball because we don't know what these stocks is going to do. We see our patterns. We see, we're looking at our technicals. We're looking at what's going on, the fundamentals. We're looking at all these angles. But the bottom line is one set of news can come out right now and push this stock down or catapult it. And then I just missed my entry, right? So we're going to be content in all things. We're going to thank God for this opportunity to be able to go in the market and make income, build legacy, continue on with building a kingdom, and go from there. So I said all that. We're going to actually dive in. We have 6 more minutes left. So we're going to be going over the non-EMA. The non-EMA is very interesting because it's like this trendy sidekick or like this high level assistant. So let's say Price is the CEO and the non-EMA is its executive assistant. So it's going to be loyal, it's going to be fast, it's going to be always on point. Now, there can be, even though I'm using this analogy, there can be some lag. So the non-EMA stands for the non-exponential moving average. So you can also use the non-SMA, simple moving average, but I'm going to use the exponential moving average in this one. So the non-EMA is basically gonna hug the candle in a way. And so it's interesting watching these because you will actually see in real time how like it will like move in a way where it looks like it's pushing it up, where it's holding it, where it's pushing it down, where it's kind of just standing there. And so again, people will tell you that they don't use indicators, they don't use different things on their chart. And so I don't know what they use, but what I know is that being able to use indicators and help you see price better and the levels better and support and resistance, then when you take them off, it helps you with your eye, like being able to see it better. And it gives you an edge. And then you can determine, I don't want to use all these indicators. I just want to use, this is my favorite one, VWAP 9, whatever you decide. Also in strategy, some strategies have a certain indication, right? It might not be a specific indicator, but it might have an indication. So if price hits here and then bounces here, I'm going to get in, right? So there's different strategies. You figure out what works for you. But let's go ahead. We got 5 minutes left in the market as it's open. And so what I'm going to do now is go over to studies, edit studies, and then I'm going to add EMA. Actually, we're going to put moving average. And we're going to go down. Where we at? Moving average exponential. And then nines already. I'm going to change. Okay, we have the electric blue color. I like using that color. All right. Okay, so the non-EMA right now is on the chart. If we go back, just looking in the beginning on February 17th, we can see that price, even before, price pretty much respected it when it fell below, right? It didn't go, depending on how close you are, but pushed up and then right when it came here. So this could be an indication that could help you on making your decisions. And so again, the non-EMA is like that executive assistant, that best friend. Though again, it's going to be more of an indication. It's going to be fast and quick. But again, remember, no thing is 100% because it can lag sometimes. So I'm going to show you exactly how you can read and trade with the non-EMA like a pro. And this is going to be no more guessing, no more getting played by the chart. Let's basically try to use this in a way that can help us determine if we're going to get in or get out. All right, so if you look at this nine and where current price currently is at 210.01, we can see that it is above the non-EMA. So if it's above the non-EMA, that is showing that it's in a bullish stance right now. So if you were getting a call or you got, you know, you basically were just saying it's going on in an upward trend, this non-EMA is going to help you determine that. So say for instance, you were in this trade and you were wanting to use this as, under here as a stop. If it crossed under, then that would indicate for you that the trade that you were considering is no longer valid. So people who are in here and they are holding because they are anticipating price breaking. And so for me, I'm not trying, like I've done a lot of anticipation and I might do some more in the future. I don't know. But at this stage, I want confirmation. I want structure. I want to know structure is holding, right? So we would have to break above here, hold, maybe come up and retest and hold. That's what I'm looking for. Because if we could see here, price broke below, price came back up, it wicked down, hit the non-EMA, came back down, right? So somebody here would have been in a bearish tone, came here, right? Set right on here. This also is more of like an indecision candle right here. Looks like a sword to me. Like, I'm coming up. I'm coming up. Okay, anyway. So set right here. Then you had this next counter that pushed it up. That would be a sign for entry. But again, once it came here, it's traded in consolidation and then it came back down. So, but what we can see though is once it held here, so that's what I would be looking for here. And somebody else here would say, okay, I'm gonna keep holding, I'm gonna keep holding, I'm gonna keep holding 11 days later. But if it breaks a non-EMA, then that definitely could signal a downturn, right? So we would have to wait and see if it actually holds, but that would change it. So we want to think about what is the story telling us about what is going on. And so with the non-EMA, again, it's exponential moving average. It's going to catch this more exaggerated move. And we're not really seeing much right now. Let me go back down to the 15. We got one more minute left. And as you can see right now, the nine, I'm primarily on the 15. And so you could have once it broke below, and now you see how it has come down and it's curling over. So, wow, this has been good to see. If you can go back and you can actually get into the basically it's like it's a setting in Thinkorswim where you can go back and you can back test this and see, what occurred. And so for somebody here who wanted to get in, it would be looking at, okay, does price come back here, retest off this non-EMA, try to break through, or does it actually res you know, does it actually reject off of this area? Now, sometimes if you're waiting for price to come back here, it won't. Sometimes it will not. Sometimes it will. Sometimes it won't till an hour later. Who knows? But you have to be able to read other things like, okay, this did form, it is a lower candle, right? It is, let's see, in line with here. So we know that this could potentially be a demand zone, this area right here. And so anyway, it's going to be interesting to see. But once this price dropped right here, I wouldn't be in such a hurry to now try to buy a put because I wouldn't want to see how's price reacting. As you know, right now we're at 4:01 p.m. But let's talk about more about this 9 EMA. So the 9 EMA is basically going to be close to price. And you can see when we go to edit studies and we add the simple moving average. Because you'll also hear others who talk about the simple moving average. Let's change this to this green so you can see it. Okay, so see, even with the simple moving average, it actually came down further than the exponential. And so we catch more of this. But if you were following here, it price wouldn't have came down here. So this could have been an indication on to get in right here, depending on what your strategy was. And basically, you kind of monitor and watching it up here and then get out here. We have to see, I had to go back to the left and see where the other resistance levels are, which we know is somewhere up in here just because of what occurred. But even seeing this tweezer bottom is an indication of a reversal. Potentially, it could be. And so the simple moving average, you can tell that it's a little farther out versus the exponential moving average, which is closer to the price. Now, all moving averages, all indicators are following price. It is not leading price, it's following price. And so we want to make sure we're watching price, but we also want to make sure that we are looking at the structure and what's going on. So if I'm on the 15 here, I'm gonna zoom out and we're gonna be able to see more of what's taking place. And so this is covering from last Friday. I'm gonna go to the time frames and I'm gonna change this to, let's do the 30-minute. Actually, let's go to the 1 hour. Okay, so even on the 1 hour, just taking us back to approximately June 19th. And we can see that price was on an uptrend, trading consolidation, actually broke out, and it's been on an upward trajectory. And then July 6th, price rallied down, trading in some consolidation, pulled back some more as of July 9th, came up. It's probably like a bull flag. And then from the 10th, it's been trending down all the way to the 14th. And now it's trying to make its way back up. So we'll see. But it did form higher lows. So let's go. Okay, so just like we see here, if price actually breaks this level, then that's going to be an indication it could potentially come down further, but then it also could form a double bottom here. So it's really managing price at these different levels because it can react. And just like if it came here, we can see that it hit this area before, right? And it was a demand, like it triggered buy orders or, more purchasing buyers were in control. So I'm going to take that off though. So we want to be thinking about as we're trading this, where the levels at? Where the levels at? What happened before? Okay, I'm coming up to an area of resistance. So let me think about like, do I want to go ahead and protect these profits? Our number one thing it should be protecting our capital that we have, our capital that we were making. If you got $10 and you see that it's coming up here to resistance, if it sells off, you're gonna be messing around being negative $40. It just depends on what if you got a contract or what. It just depends. It depends on how many contracts you got. So we want to just be mindful of that. And so right now, Apple is coming back down to this area that would potentially be a buy zone. So we're gonna see. So I actually have this marked and well not yet, but let me mark it. Create alert. So I like to actually also create alerts. That might kick me. Okay. I like to create these alerts too that can help me so I don't have to feel like I have to watch all of these charts. Even though I do watch a lot of the charts. But anyway, okay, so let's talk some more about this non-EMA. So let me come back over here. And I'm going to take off the simple moving average because we're going to talk more about, I'm going to just hide it. So I'm going to take and just hide the eyeball. Okay. All right, so let's talk more about this non-EMA. So again, when price is above the non-EMA, it is pulling back. Wait a minute, so when price is above the non-EMA, but then you see volume is low or volume is higher, you want to make sure that you're monitoring what volume is doing because that can make a difference. And then also the time frame of the day can make a difference. Every day is different. Every day is different, but you have pretty similar things that can happen. And if you know if this, then that, then it could just help you make a better informed decision. Because there's times where I've had $8 that I could have accepted. And because I let it go to these other levels below, I'm like, oh, okay, well, the non-EMA is right there. Let me see if it rejects. Okay, it rejects it. Okay, well, the VWAP is right under that. Let me see if it rejects the VWAP. Oh, okay, but then the level is right here. No. But then by the time I do that, I have now and this is in scalping particularly. I'm now in like a $80, $60, $50, $30, whatever dollar drawdown when I could have just accepted the $8, got out, waited till price hit the levels and then confirmed and then just re-entered. And we can remember that and not hold on. That is going to be a game changer. Not holding on. Not holding on. Right? Now, some trades need that room, right? It needed that room. We have the 9, the 21, and then we have a level, but then we got VWAP. And so maybe VWAP is $1 away, and you have an options contract that's 30 days out, and you want to be able to give it that room so that if it does react off VWAP, or maybe you are buying a put. It just depends on what your strategy is. I don't want to start making up. I want to be able, you to be able to see it. The bottom line is, depending on your strategy, you want to make sure we're trading level to level, and then knowing what our strategy and our stops are. Because even today, I did a trade and it got like maybe 18%, and it hit a level, which I'm actually going to see where it'll close at. It hit the level where there would be sell orders. It hit 224. And I went ahead, let me see it real quick. I want to see it. And I went ahead and sold it. I'm glad I sold it, right? If it would have went above it, then that's what it just would have happened. But because I know it hit this level all these other times and sold off, then that's a high probability that that's what's about to happen. If it does, I'm gonna be losing some profit. I wouldn't have lost all of it, but some of it. And but again, this could set me up for the next day. But I don't want to hold overnight and then theta and all the, the fees and stuff like that, the time decay, it starts to accelerate. But anyway, let's go back to Apple. As I'm talking to you about all these other things, it all goes together. I'm trying to help you see and paint a picture of how to think. And that was an example of, if we know that we're at this level right here, then this could have been an indication to hold or to let go. Just depends on what your strategy is. Okay. So let's play a game and we're gonna say hot or not. So if price above is above the 9 EMA, you start seeing it pull back with light volume. Light volume. You start seeing it pull back, but prices above the 9 EMA. Well, this would be something that I would say could be potentially hot because it's pulling back. It's almost like a rubber band. Like my son wants to run around and like just take rubber bands and then flick them off or stuff. And I'm like, oh my God, please stop doing it. But it actually helps me with analogies because when he pulls it back and it flings, it has a lot of momentum. So basically, I look at it like when stocks pull back, a lot of times, even though sometimes they're like snatching liquidity or money and running with it, they're pulling back to fill up the gas to then shoot or to drive forward, right? And so if price is below the 9 EMA and it's sloping down, so you were in a call, price now goes below the EMA, and you see it's sloping down. What would you do? Okay, so look at this. You were above the 9 EMA, like on Apple, right? You start seeing, so by now, you start seeing this part of here. You start seeing it's like, okay, it's kind of curling. It's definitely curling over. And you're like, man, I want to hold, I want to hold, I want to hold, right? But you got to think about how many more days do I have left in the contract? Do I want to, be in this much drawdown? Am I already in profit? What happens if it goes 10, let's see, 10 cent down, 20 cent down, 50 cent down? What happens? What is the next level? So if we're here, then we know a potential level could be here, and could be here. And anything else they want to do in the middle. So once you saw it curve that in here, the 9 EMA actually gave you an indication on, yeah, maybe I should get out, right? These gave you indications. And then once it came here, rejected off of it and came back down, even though it poked through some, being able to get out here at 211.03 versus 209.73 or 210.05 or 210.37, that's a big difference. Or if you got out, you saw it cross, you got out, and you said, all right, I'm gonna get out. If it come back and retest, I'm gonna get in. I'm gonna get in because I've already seen all the stuff that it did here. It already crossed. This whole day, it was going up, right? Even though it pulled back, tested 90 EMA again, and it went up, rallied, came back and pulled back. It came in and retested. Then that could also been an indication for you to get in and get a put right here. And I get it, it's going so fast. There's different things going on. Like, but again, if we start learning our levels, if we start looking at some of these indicators, we would be able to, it'll just help us indicate where price is going. And so basically being able to push your stop, maybe, 20 cents out. If I'm wrong, I get out, I lose, maybe $8 to $12, depending on the contract you got or how many contracts. Let's say it's just one contract, maybe you would have lost anywhere from $8 to $12 ish, right? Or it gives you an opportunity. You got in around here, you start seeing it comes up, but it's still respecting this nine. You see it here, and it drops. Beautiful, beautiful trade. So we want to be able to just know, and also knowing to go ahead and take profits, because again, this level down here. And so we might look at this, if I was to take this line off, if I didn't have this line here, right? Okay, then you're seeing this. But if I put this line, it's like, okay, this is an area. So you want to do things that can help you see what's going on. And so I don't know about you. I got two kids running around. The summer break, I got a toddler and I got a 11-year-old. And so I need these tools and things so that if I go do lunch or do something else, I can come back and I can quickly see it. So do what works for you. And so let's talk a little bit more about the non-EMA. I know I've shared a lot of other things, but I know that could help someone. And so the thing about the non-EMA we want to look at is price above the VWAP. And so the non-EMA is great when it's paired with the VWAP. And so if you want to go to the videos, you'll be able to see a video on VWAP. On the non-EMA, when it slopes upward, like that could be an approval. It slopes upward. So you're starting to see on here, it sloped upward. Okay. Even here, you're going to start seeing it slope upward. And it's not, of course, you're not going to be able to see this whole move, but you'll start getting indications of it. And so when you look at the non-EMA, did price pull back to the non-EMA like this rubber band that then could potentially spring forward, right? At the non-EMA, do you see a reversal candle? Do you see a hammer, something that's engulfing? Do you see that there? And then what is volume looking like? Right? See how much volume this is here? Of course, we're now at 416. So it's different because, now it's after hours. But still, how does volume look like? So we'll look at this in the morning. And then, you know, only then, like once you're checking these things in your head, you're going to start learning this quickly. Only then do you step in that trade. Because if you were here and you're still holding it, if you're already in profit and stuff like that, that may make a difference, maybe part of your strategy. But if you're scalping, you would have wanted to be out of this, right? Once you start seeing that price start to curl, you would have wanted to be out of here. And even now, in after hours, let's see, it actually came up to 210.20, but we're still seeing that once it just did that move, we still see it's curling now. So Apple could come back down to this 209.74 area, and then yeah, 209.38-ish. This area right here, this 208.91. So let's come here. This level right here. And so I'm actually interested in, we'll see. We'll see. Because again, if we go back to the daily chart, we can see how Apple has been sitting here for 11 days. Part of me, just thinking about like, earnings is coming up in another 2 weeks. So we shall see. We shall see what happens. But if it can get above here at some point and hold, that may be a good entry. So when we think about the 9 EMA again, some of the things that we want to spot is we want to mark our charts in a way where did price pull back to the 9 EMA, right? So we want to spot where that is. We want to watch for any bounces or reversals at the 9 EMA. We want to look for entry above, right? That's a confirmation candle. So what does that look like right there? Is it a bullish candle where it's got like a hammer shape? Is it a big body candle, Maribozo? Like what is that candle confirmation right there? And then we want to be considerate of having our stops just below the last price. And then looking at where's our target at? Where's the next level of resistance? Are they the same? Or is our target in the next level of resistance two different ones? So being mindful of that. But just remember the 9 EMA is quick. It's gonna be ready and eager to get to price, right? To show you what's going on. But sometimes it can lag. But oftentimes, if you just continue to go back to the chart, just put the 9 EMA on here, we can see like, wow, okay, let me go to a 30-minute. Okay, so price was here, price came all the way up, and you're looking like, wow, this 9 EMA is far below it. But we see that it could be an area of resistance and then or was an area of resistance, price pulls back, price rallies. Okay, we see it resisted this zone again. And then once price wicked and fell, once you caught price around here, that's 210.23 to 208.97 back in this zone. And so it would also be interesting to see, if price holds here with some receipts, with some confirmation to be able to purchase a call here and have enough time to just ride it back up to this, around this area, this zone of resistance. So there's a lot of different things that you can do. You want to make sure that you have room, you have time, because again, these stocks can do whatever it wants to do. So again, thank you for joining. We went over the 9 EMA and I shared some more insight to help you on your journey of advancing in reading the charts. Yes, we can take signals from other people, but I don't know about you. I have lost money taking other people's signals. And also, not necessarily because of them, it was one, I got to be able to know what I'm seeing and not just trusting. We put our trust in God, and then we, you know, we believe and work with other people and things like that. But we believe in God, we put our hope in God, and God gives us the resources and tools and things for us to learn it for ourselves. Other people can be a resource, they can give us some insight, but unless you know how to read the charts, it's important so that when you do hear different things and different signals, different, opportunities, you can go to the chart and be like, I'm not getting in until here. Or yeah, I see I can get in right now. Or wait a minute, okay, I'm not gonna get in here. I'm gonna let price see if price pulls back. Put your alerts in because there's a couple of charts. I was waiting for price to pull back and it still hasn't pulled back. And it's like 4 months later. But that's okay because I'll know what to look for in the next opportunity. Because remember, there's always another opportunity. All right, so I am Denisha on a mission with Trayvon, and we just went over the 9 EMA and some other interesting just detail and words of wisdom to help you on your trading journey. So again, welcome again to Trade Vaughn. Add your comments, like, subscribe, and I'll be back with the next video.